Trade Pros, hello. Welcome to our morning market update for Wednesday, April the 1st. Trading quite low. The Dow Jones dropped 600 points overnight after rallying a little bit at the beginning of the European session. And the reason is why, you might ask. Well, there's a lot of pressure from this Chinese trade war with the United States and really a lot of other factors as well. So let's go through it. First and foremost, let's go through our update of the markets overnight. In Asia, Japan's up 0.13%. And it's pretty much the only market that's up. Hong Kong is down a whopping 2.19% in one day. That's a huge sell-off. China's down 0.18% as a whole. India is down 1.14%. And the carnage didn't stop there. It actually got worse. In Europe, at midday, London's down 0.43%. Paris is down 0.61%. Frankfurt is down 1.28%. So equity is getting rocked across the board from the European markets that spilled over from the Asian session, which was caused by the fact that there's some new tariffs that are imposed by Donald Trump, and China reacted. And the way China reacted, it was stronger than expected. The reaction caught the market by surprise based on the products that they selected to impose tariffs on. We're going to talk about that in a moment. All right, futures here in the United States, Dow Jones is down 1.77%. S&P is down 1.36%. NASDAQ's down 1.79%. So quite a bit of a sell-off there. Crude oil is also down 1.86%. We had some inventory data yesterday at 4:30 p.m. And this morning we're going to have some inventory data at 10:30. Crude oil is very exciting because today's crude oil report is going to cause some volatility. And crude oil inventory every Wednesday at 10:30 has the potential to make you your entire weekly income goal in just 1 hour of one day. If you know how to trade crude, the good news is we trade it together in our trading room every morning, or not every morning, every Wednesday morning when it comes out. Some days it comes on Thursday if Monday's a holiday. All right, so let's look at a few other assets as well. Gold is up 0.77% on the selling. Gold benefits from safe haven buying, which means when markets or when participants are selling out of equities, they need to do something with that cash. Where do they put it? They put it into gold volatility, which is the VIX index. They put it in the typically Japanese yen as well. So some of the safe haven assets this morning are all bidding. The majority of them are bidding, and they're quite strong. Bitcoin is down 4.05% today to 7,600. It's rallied a little bit off of that, but you see, here's a question about Bitcoin all along. We knew that it was an alternative asset. It wasn't really linked to anything. It had a mind of its own. In this first real big sell-off in the last couple weeks, what has Bitcoin done? And that was really the opportunity for Bitcoin to establish itself as a safe haven player, and it hasn't done that. All right, so on the downside, Bitcoin has also slid. So the big question was, when markets started to drop, how will Bitcoin react? And we're seeing that Bitcoin traders are also fearful along with the general market index. So it's just another asset that correlates with other risk assets. So it's now become just a risk asset. It's nothing special to it in terms of when the market drops, it'll retain its value. It's become an asset like any other asset. And that's an interesting point that you need to understand if you're trading cryptos. All right, this morning we had some news. And that news was 8:15 ADP's jobs report. And that the reason this report is so important is because it's sort of the first look at the jobs numbers for the month of March that we just passed. And on Friday at 8:30, that's a big report. The non-farm payrolls, the private jobs numbers. But these numbers today forecast a little bit. They have correlation with what could happen on Friday. They're not always 100%, but the report came out today pretty strong, and it's kind of given the markets a little bit of a boost, a much-needed boost to start the morning. So here's what they came out at. The number was, I got to zoom in a little bit, 241,000 jobs added in the month of March versus 208,000 expected versus 246 prior. So this number is really strong. That's a really big beat, and a continuation of a strong labor market according to ADP. Now, the next thing traders are hoping to see is that same momentum transpiring at the Friday's report at 8:30 in the morning. If we get a strong jobs report on Friday, we could have a little bit of a short squeeze for this week and take out some of the short sellers down below if we get a good number. But you know what they say, ifs and buts were candy and nuts, we'd all have a Merry Christmas. So try not to trade based on ifs. Try to trade on what you see. All right, so strong job numbers in the morning. That's given the equity markets a little bit of a boost after sliding. At 10 a.m., we have ISM non-manufacturing index. All right, and at 10, we also have factory orders. And then at 10:30 at the bottom of the hour, we have EIA petroleum inventories. This is the Department of Energy's crude oil inventory report. Causes a lot of volatility and predictable opportunities with crude oil, and that's why day traders love it, like us. All right. There's not one professional trader that doesn't trade this report on a Wednesday. They just too much opportunity. All right, unless they're like bedridden or something and sick. By the way, the cold's going around. It's like a flu. I'm starting to get it, but you know when you start to get a flu, when you get the flu and you say, I'm sick, that's when you get sick. I'm not sick. I'm healthy. I'm recovering. Therefore, I won't get it. You guys will see. U.S. market futures are in the red amid escalating trade tensions between the U.S. and China. So Trump administration imposed a further $50 billion of tariffs on Chinese products with a 25% rate. And China immediately responded. This is what the market, the market knows that Donald Trump is imposing these tariffs. It wasn't too big of a surprise. The products that he did the tariff on weren't a shocker. They're kind of what was expected. The way they select them, the United States government, on what to impose sanctions on, is the ones that will cause the most economic pressure on China, but cause the least amount of damage to the United States consumer. All right, that's how they selected them. And so basically, Donald Trump said, here's another $50 billion sanction that we're going to slap on China. China responded like that immediately. It's like they were prepared for it. And I failed at the snap. There you go. Now it's snapped. So here's what happened on China's front. What did they put tariffs on? They put tariffs on soybeans. The United States provides China with a lot of soybean crop for them to feed their livestock for farming purposes. The other thing that China put a tariff on is airplanes. That's huge. And the reason it's huge is China hit right where it hurts. China didn't mess around and say, oh, we're going to put a tariff on like wristbands and stuff like that. They just went in right for the core thing, right the depth of what trade is between the United States and China, and they hit that soybean with an import tariff. That caught the market off guard. That's guaranteed to intensify this trade war. And how do you know that something is a trade war when people who are at the top of the helm tell you that it's not? Donald Trump this morning tweeted, he said, this is not a trade war. We lost that already years ago. Well, it is a trade war. Newsflash, it's a trade war, and it's not going to get any better before it gets worse. So that's what the markets are concerned about. Listen to your news wires today because it's going to be very important. Any developments on this front will lead to significant volatility in the equity markets. But I think today the downside will be the right side after a brief rally right off the open. Expect a little rally on the open, maybe a little short covering rally, profit taking, and then we're going to probably continue on downward in the first 15 to 20 minutes. Okay, that's kind of what I'm looking for. If the market rips and starts to go higher, then guess what? I'm wrong, and I'm just going to jump on board. Being wrong doesn't mean I lose money because I know how to do this professionally. And by the way, on that point, our trading psychology course is coming out very soon. Get on the email list. We're building it right now, and I'm very excited for you. I'm going to teach you the mindset of being a winner, not just at trading, but in life. Based on spending thousands of dollars myself to get certified in this stuff, I'm going to now parlay that info to you and relate it to trading. All right? Imagine finding the lost user manual for your brain. That's what this is. Now imagine how that would be helpful for you for trading. Imagine if you knew how to control your brain while you were trading. You don't have to imagine. I'm going to give you guys that stuff coming up the next few weeks. We're working on the content right now. All right? That's what's happening right now. Tariffs are driving the way down on bearish sentiment. Let's see how they recover. The U.S. market's going to get a chance to go bullish. Where is it at right now? It got a little choppy right now. It's slowing down. We're waiting for the U.S. open at 9:30. All right, that's what I got for you guys. Trade careful today. Manage your risk. Because it's going to be more volatile today, the circumstances are not. You can't really predict what China's going to say or Trump's going to say. So what you got to do in a market that's very volatile but not predictable, so you got to reduce your trading size a little bit, do a few less contracts than you typically do, and reduce your trading frequency also. You don't need to have 30 trades. Go with the opportunity. I mean, if you're really good at seeing opportunity, you don't have to take that advice. But somebody who maybe just follows and chases price around, one of the best things you could do is stop doing that. Stop chasing the price, wait for it to come to you, and queue up some opportunities. I think today's a great day. You'll have good 3 to 5 day trades very early on, low risk, high probability. You take those, you make your money, and you get out. And that's what day trading is about. You guys have a great day. I'll see you tomorrow morning at 9 a.m. Good luck. Trade careful, manage your risk, and trade like a trade pro. Take care, YouTube. See you tomorrow. All the best. Goodbye. All right, trade pros in the trading room. Let's open this up and let's have some fun today. There's going to be huge opportunity today to make some money. and we're going to do it. We're going to take advantage.